Welcome to my weekly market roundup, 14th February 2021. I am Sagan Nandi, used to work in IT, swing trading stocks now using the Q systems and techniques that I develop. You may contact me using my email ID tradingprofitably@gmail.com. I regularly share live market and stock analysis on my website, YouTube channel and Twitter handle. You are most welcome to make use of them. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. These are the systems I use in live trading. These are the underlying platforms and data sources. They are 100% real time. I use them in my trading, the only systems that I use, and I'm going to use the same systems today as well. That was the last slide of the presentation. Let's start with a look at the global markets. Starting with Australian index AXJO. In earlier roundups, I mentioned that in the weekly chart, AXJO is creating a megaphone pattern. It was at the upper edge of the megaphone pattern 1 week ago, and I suggested that was not the right point to take new long trades. That was useful. This week, AXJO displayed a bearish headwind signal, and it also closed with a bearish backdrop color. In the daily, it pulled back very little bit. It continues to be at the upper edge of the megaphone pattern. Friday's traffic light candle color has turned red. Backdrop color is red. Bearish headwind is there in the weekly. This may be a time to look for reversal trades at the top in individual stocks. Because the AXJO index has displayed bearish headwind, you may look for headwind reversal trades in individual stocks, bearish side. Overall, for longer term period, it is in an uptrend, but because of the megaphone pattern, we are not going to take new long trades now. Next is Japanese index topics. Topics is much stronger than Australian market. The weekly color and shape both are bullish. There is no bearish headwind at all. In the daily, it sharply moved up and now it is above the upper boundary level. Bullish but too extended to take new long trades. China's CSI 300 index. Chinese market is closed. The last candle is as of 10th February. Chinese market is closed for Chinese New Year for several more days. So it is not going to move. As of 10th February, it is bullish both in weekly and daily. UK's FTSE index. For some time, it was bearish in the weekly daily both. The weekly backdrop color is still bearish, though the shape is bullish. In daily, it displayed a surprisingly large number of very indecisive doji candles. 1, 2, 3, let's ignore this next one, 4, 5, 6. 6 out of those 7 days had doji candles. And on Friday, price closed higher with a bullish flow. And if you look down here, you will see it also created a reversal candle. There is an approach that says that if there is a bullish shape candle after a number of or one doji candle at a lower price point, that may be the starting of a new bullish move. If you applied the Q techniques, then on Friday, FTSE index is giving a pullback long opportunity in the daily chart. You might not buy the index itself, instead drill down into underlying stocks. You may do that using Q Edge or Q Vital or Q Index. Find fundamentally strong stocks that are also starting to go up. Those may give low risk buying opportunities now. That is how Q traders like to buy at the bottom. We wouldn't buy, at least I wouldn't buy when price is already up for several days. Friday is the optimal day to buy. Start to look for buying opportunities, and I think you would find quite a number of buying opportunities on Friday in the UK market. Over longer period, it is still in an uptrend, though recently it was weak, and on Friday it might have given us the buy point again. Lastly, India's Nifty 50 index. It was the strongest and is remaining the strongest of the global markets, though this particular weak candle is weaker than the Chinese market candle. Keeping in mind, China market is closed for several days. So the markets that were open till Friday, India's market continues to be the most bullish among the global markets. Bullish, but daily is showing a number of doji candles at the top. What we saw in FTSE, we saw a number of doji candles at a swing low followed by a bullish shape candle. What we see in Nifty 50 is a number of doji candles at a higher price level. We have not had a bearish shape candle yet, but if we have a bearish shape candle, it would be somewhat similar, but not exactly similar or opposite to FTSE market. But if it comes down now after a series of doji candles, that may be the time to look for reversals trade setups, like headwind reversal setups in individual fundamentally weak stocks if it comes down. Right now it is bullish, but a number of doji candles at upper boundary is a reason to not only not look for buying opportunities, may start to look for shorting opportunities. Of course, overall longer term it is in an uptrend. All the global markets are in an uptrend. UK market was weaker, but it is probably going to go up next week. What about the USA market? For that, I'm going to use Q Elite on TradeStation. For global markets, I was using Q Global on Metastock. Let's start with the market ETFs. S&P 500 ETF SPY, bullish in the weekly, bullish in the daily, near the upper boundary, overbought for many days, shown by the stretch band indicator. Bullish but overbought, we are not going to buy. If you remember the pattern on the FTSE chart, this was the equivalent point in SPY when we could start to look for buy setups. Pullback, it was starting to go up. What happened to SPY at this point is happening to FTSE index now. Again, we would not buy SPY at the top. We would have started looking for buying opportunities at the swing low. SPY is in an uptrend. There is no weakness in daily or weekly. That may be a pattern we see in the other ETFs as well. Nasdaq ETF QQQ, bullish weekly, bullish daily. There was a bearish headwind 2 days ago, that's Wednesday. However, that candle had a lower tail. If a bearish headwind comes in a candle that has lower tail, then some of the bearishness associated with the headwind is nullified. In any case, the headwind signal didn't confirm a bearish headwind short setup if you applied the checklist conditions for several reasons. One is it had the lower tail that didn't meet the checklist conditions, and also the weekly did not meet the checklist conditions. We could be cautious and apply trailing stop in existing long positions, but we didn't have any reason to start looking for short trades. At the right edge, weekly, daily both are bullish. Dia, it was and is relatively weaker but still bullish. This week's candle shape, color both are bullish. Daily went above the watermark resistance. If it can come back below the watermark resistance now, that will create a false upside breakout. That may be a sign to look for shorting opportunities. But it has not come down yet, has not created the false upside breakout. So the dia is continuing to be bullish. IWM, bullish color in weekly, though the shape is indecisive with an upper tail. The daily is bullish near the upper boundary, again overbought. Market is bullish, there is no sign of weakness, and if we look at the market internals, there is no sign of weakness there also. Let's quickly look at them. I am looking at the 4 major indices now: Dow Jones, Nasdaq 100, S&P 1500, S&P 500, all daily interval. I am focusing on the percentage MA breadth calculations. The percentage of stocks were 50 MA above 200 MA. Interestingly, for Dow Jones, tilted down. Though the market was bullish this week, it tilted down on Friday. Before that, it was flat. This is daily interval, but it has not rolled over yet. It is still above the white average line. Nasdaq flat, continues to be bullish. S&P 1500 bullish, and S&P 500 just about to come below the average line. Percentage of stocks above 50 MA rolled over earlier for all the 4 major indices, has not recovered yet to the average line for 3 indices. For only S&P 1500, it recovered above the average line and flattening out. In the last webinar, based on that, I mentioned that S&P 1500, the broadest of these 4 indices, was relatively stronger, showing that large cap or mega cap stocks were relatively weaker, though the market was overall bullish. And the percentage of stocks above 200 MA, interestingly, that has rolled over now below the average line for Dow Jones, Nasdaq, S&P 500. S&P 1500 just about to roll over. So the percentage MA calculations are showing some weakness. Not bearishness, but some weakness. And for the internals, new high low advanced decline up down volume, weekly is the suggested interval for Q technique. The same 4 indices, and I'm going to focus on the internals. In the last few webinars, I showed there was weakness in new high low, not in new high low, advanced decline and up down volume. That weakness is continuing. Though the market keeps on making new all-time highs, the new high low is far below their previous peaks. And the same is true for up down volume, and the traps are becoming deeper. The lows are becoming lower. So this pattern is showing weakness more clearly than the percentage MA calculations. Advanced decline up down volume shows the weakness before the market drops. So this is a thing I am noticing and keeping in mind. If we look at new high low, Dow Jones is showing some weakness, but the other three indices are not showing any weakness. That is fine because new high low tends to show the weakness last. Another thing to notice is that on the weekly interval, S&P 1500 is now red hot in terms of both thrust and jump. Jump shows how far extended it is compared to past longer term history, and thrust shows with how much force it tried to reach that high level. Red dots here on thrust shows exhaustion. Red dot on jump shows it has traversed too far. Until last week, I didn't see red hot condition in these major indices on the weekly interval. Now we see that red hot condition in S&P 1500, also in S&P 500. In fact, if I look at the chart for IWM, let me get the IWM chart and change the template that has jump and thrust. IWM also has the overheated condition in the weekly for both thrust and jump. Therefore, S&P 1500, S&P 500 and Russell 2000, three of the broadest indices are overheated now. Earlier I showed from the percentage MA calculations that the S&P 1500 was stronger, that is smaller cap stocks were stronger, and that has created this red hot overheated condition. It is possible that the market will pull back from here, but we will not take a short trade unless the major indices are showing some weakness in terms of technical technique, that is showing a bearish headwind setup or a box setup, probably box setup or bearish headwind setup, but that has not come yet. If we look at the Nasdaq internals, this is the whole of the exchange. The advanced decline up down volume is showing some weakness in the weekly. The Nasdaq exchange, that is the composite as a whole, is also showing the red hot overheated condition for thrust and jump. And if I look at NYSE composite, here we don't have the red hot condition so much as Nasdaq. There is some weakness, not so much as Nasdaq in terms of advanced decline up down volume. So in summary, the internals are showing relative weakness compared to 1 week ago. That is, if we look at the percentage MA calculations, and showing continued weakness in terms of advanced decline and up down volume. In addition, what has changed from the previous week is that three of the broad indices, S&P 1500, S&P 500 and Russell 2000, they have become overheated in terms of weekly thrust and jump. Reason to be cautious, but not yet time to take short trades. There are buying opportunities even now I shared some of them earlier. We'll look at some more today. Before that, let's look at the market from the other Q angles. One is the 1 month to 1 day sector, industry, stock, advanced decline breadth. This study is very useful, shows us the historical pattern, the transition. Is there any transition? Yes. Gradual weakness. The longer term periods are more bullish. 1 day period and 2 day period are relatively weaker, but still these last two periods still has bigger green pie portion. So the last 2 days are relatively weaker, but still it is bullish. We have to say the market is bullish in terms of sector breadth, industry breadth, stock breadth, unambiguous signals. If we look at Friday's picture, 8 sectors went up, 3 went down. Over 2 days, 8 went up, 3 went down. Friday, which 3 went down? Utilities is one, healthcare is the other, and then consumer discretionary. Consumer discretionary may be a surprising one if one considers the possibility of the large stimulus bill being passed. It may be surprising that consumer discretionary was weak on Friday, but Q traders don't get surprised. They look at the data, consumer discretionary is weak, so they will take action accordingly. They may drill down from sectors to industries, industries to stocks to see if there is a need to protect profit in existing long positions or if to look for short trades. Energy was the best performer on Friday. Materials was also strong. Infotech also was strong, and communication services was strong. If we look at a longer term view, over 5 days now, 10 sectors up, over 10 days, 11 sectors up, over 1 month, 10 sectors up. The 1 month period has remained bullish for quite a long time. And these 3 periods bar chart overall is very bullish. That is not surprising, seeing that the market is continuing to go up. What about technical breadth? Let's look at that from Q Finder, the balance between bullish and bearish technical signals. First, starting with the weekly interval. Overall, it's bullish, 78% signals bullish. Strength signals, 96% bullish. Trend continuation, 82% bullish. Only reversal signals are bearish. This is what I saw and shared in past several webinars. The reversal signals are remaining more bearish than bullish. Therefore, if the market drops, some of these stocks may give optimal shorting opportunities. Overall, we have to say that weekly technical breadth is bullish. There is no other way of putting it. And on Friday itself, the picture is balanced. Some are slightly more bullish than bearish, some are slightly more bearish than bullish, but overall, Friday's picture was balanced. We looked at the market from many angles. We looked at it from global markets angle. We looked at it from ETFs, USA market. The USA market futures are also bullish. Looked at internals, looked at sector, industry, stock breadth, and also technical breadth. All are bullish. In last several webinars, I always shared this market breadth total view, and I mentioned that in the past no significant drop has happened without a distribution count of 2 or more. And last we see the count is bearish, distribution counts are in red here, accumulation counts are in green. The last count was distribution count of 1, and I mentioned in the YouTube live session at that time that's because it didn't go beyond 2, it was unlikely that it will lead to a large drop. That came true, and market recovered. There is no accumulation or distribution count now at the right edge. If we see a distribution count of 2 or more, we'll be cautious. But there is no sign of that yet. This is the total breadth of all the composite and major indices, 6 indices combined into one picture. The percentage MA calculations, the overall picture is showing the same conclusion as in the individual indices conclusion. Some weakness but not bearish. Distribution count is not there, so there is no reason to think market will drop suddenly. Now in this market, what trades to look for? Market is overbought, so one may start to look for shorting opportunities, and market is still bullish, so one may look for buying opportunities also. I regularly share such ideas on my website sagarnandi.com under this category 360-degree trading techniques and ideas. These are not trading tips but example of application of Q systems and techniques using live systems, always before knowing the results. Let's look at some of the ideas I shared recently. One was on Friday, and no pick and choose as is my usual habit. Just take the ones from the latest. Macy's. I shared it on Friday. I shared it at 12:30 p.m. Eastern Standard Time. Q Edge showed that the industry department stores, it was weak, and the pace column showed deceleration. It was relatively weak and it was decelerating. So that allowed me to short in the industry. Macy's was down by 2.2% when I shared it. Valuation medium, very poor earnings growth, negative earnings growth for 3 quarters, 3 years, negative revenue growth, 3 quarters, 3 years. That was reason enough to look for shorting opportunities. And as of the time I shared it, it was breaking down below trendline support. The weekly color was neutral, shape may be more bearish than bullish at that time. It could be taken as a breakout short setup if the candle closed as a bearish shape candle. Breakout setup has no checklist. Why I didn't try that is because most breakouts don't give low risk trading opportunities. This one was giving a low risk opportunity because the stop could be just above these indecisive, very indecisive and narrow candles. It was moving inside a very narrow range with indecisive shape candles, and the understanding is if from a very narrow range indecisive candles price breaks down, that may go just about far enough to cover the risk distance. Oftentimes it goes far more than the risk distance, so it could give a short setup if we had a bearish shape candle at the close of the day using the breakout technique. Let's look at Macy's how it closed. It closed with a bearish color, but it has a lower tail. The Q guideline is don't take the short at the market close on those days, but wait for the next day, which will be Tuesday, and use the fine-tune chart to take a short trade if it starts to go down again. This opportunity may still present itself on Tuesday. Monday is a holiday, market holiday. If Tuesday it continues to go down, it may give a short setup. Is it okay to take a short trade in a bullish market? Not the best approach, but it is possible. Also, if we think about the effect of COVID, and it seems it is not going to go away so soon, department stores like Macy's may be in a disadvantage. That is not a criteria for my trade setup, but that is some background information I have in mind. I don't trade based on that, but I keep that in mind. If Macy's continues to go down, that may give a shorting opportunity. Also, though the market went up and made new all-time high on Friday, Macy's went down by more than 2%. That is bearish. Again, I would not take a short trade at Friday's close looking at the lower tail on Friday's candle, but on Tuesday, if it continues to go down using fine tune, there may be a shorting opportunity. Let's look at another idea that I shared, Apple. And I didn't say it was a shorting opportunity. I wanted to share it as a Q technique application. I keep an eye on the mega cap FANG stocks, and on Friday I saw that of all the FANG stocks, only Apple gave a signal, and that was a bearish signal, breakout signal. This was using real time, not at market close. And I looked at the industry. The industry was weak, showing deceleration. So the industry allowed me to short. And I looked at fundamentals, overvalued stock, that allows me to short. It was steadily going down over 10 days, 5 days, 2 days, 1 day, and then in real time also. So it was showing relative weakness. The industry was relatively weak, and in itself also it was weak. 64% of the 31 peer stocks were down, though the market had a bullish day. And this is how the chart looked like at that time. The weekly was actually weaker than Macy's because the backdrop color was bearish. The shape was also bearish. Daily created a false upside breakout. Weekly also did the same. Then came a bearish flow candle, but that candle had a lower tail, and that candle was just above the trend line support. Because of having the lower tail and above being trend line support, we are not going to short. When I shared it based on Q sonar real time breakout identification, it was falling below the trend line support, but I highlighted that there was another trend line support nearby. Relative performance was weak. I didn't share it as a trade setup, but as a way to show how you can identify breakout opportunities in real time. But there was a trend line support nearby, though one was being broken, so we wouldn't take a short trade in this case. Also, let's see how it closed the day. All the Q swing trade setups are confirmed by the close of the day. When did I share it? I shared it at 10 a.m. That's a long time before the market close. I could see the breakout in real time, but let's look at how Apple closed the day. Remember, you know already the trend lines work very well. Therefore, a breakout of trend line is significant, but until the breakout is confirmed, the supports hold quite well. And we see by the close of the day, it went up. It went up, closed right below the trend line resistance inside a triangle pattern near the tip of the triangle pattern. That is very indecisive. If the breakout from a triangle pattern happens before it reaches the tip, then we are more comfortable taking a trade in the breakout direction. When the breakout happens right from the tip, then there is high degree of indecision among the market players where to take it. So even if it breaks out now to the upside or downside from the tip, I don't think it will be safe to take a breakout trade. Breakouts from trend line support resistance works better if the breakout happens before reaching the tip. It's too long indecision now to take a breakout trade from the tip. So I will not look for any breakout trade right now in Apple. So Apple I shared on the forum on my site as a technique how you can find opportunities, look for opportunities in real time. But when you look at the stock chart and see that there is a nearby support, that doesn't allow us to short. Let's now look at one stock that I discussed in the last webinar. Using live system, I identified a shorting opportunity, or let me say bearish opportunity, that was in Iridium. It had very weak fundamentals. Let's check out its fundamentals again. In that webinar, I showed that it was overvalued. So that allowed me to short. I will not look at the industry now. Industry might have changed. What did we see on the technical charts? Bearish flow, bearish backdrop in the weekly chart, bearish shape candle at that time, bearish headwind in the daily, a sharp drop in the daily with bearish flow. And if I look at the historical trend lines using a different template, on this day it also broke below trend line support with bearish pressure. So I was bearish at that time. Next day I took a short trade, and I remember in the last webinar one gentleman asked me about the application of fine-tune chart. We gave such examples in last one or last two webinars. Let's look at IRDM, how I initiated the short trade and managing it as of today using the fine-tune chart. I identified the opportunity on this day using live systems. That was on 9th February. That was Wednesday's webinar. Oh, was it Wednesday? 9th February. When did I add 9th February? Let's check again. Yes. My calendar. Anyway, I think it was Wednesday. Thursday, Friday. Wednesday, Thursday, Friday. Yes, Wednesday pre-market webinar. Wednesday pre-market, Tuesday market close. Fine. So let's change the template to fine-tune chart. In the morning session, I use 5 minutes. So I'm going to change to 5 minutes. And to fit it in the screen, I'm going to compress it here. I identified the setup based on Tuesday's close. We did the identification on Wednesday pre-market session. The identification was based on weekly daily chart. It was a breakout short setup. It was also having a bearish headwind in the daily. Next day, I kept an eye on the fine-tune chart and 5-minute interval in the morning session. Let me magnify a little bit. This was Wednesday's open. Initially, it moved inside the early range low and early range high. I already decided to take the short trade. So what I did, when price went up to this midpoint, mid-range line, and then it start to come down with bearish upper tail candles, indecisive candles and bear release signal, I shorted IRDM with stock at this point. I didn't take it as an early range breakout. I mentioned there are two ways to take, several ways, but two of the primary ways to use fine-tune chart to take trades. One is early range breakout or use the release signal. I use the bear release signal and I use this pivot, mid early range pivot, to take a short trade, and I decided to put stop very narrow because remember the market was not really bearish, so I was not going to give it much space for stopping me out. Very narrow stop loss, and when price came to the lower boundary, I had covered more than risk distance. So I in fact booked partial profit. My stop was at the same level. I have mentioned many times before that once you book partial profit, if you immediately move to trailing stop, partial profit booking where once the risk distance is covered, immediately after that if you move to trailing stop, most likely the trailing stop is going to be hit. However, I was trying to take a swing short trade. I was not taking a day trade, but I took a precision entry using fine tune chart. I booked some profit and I left my stop at the original stop. That was not hit. It closed near the low of the day. And then I changed my stop using daily interval, using the protection signal. So let's change the template. Now I am looking at the daily interval Q stop loss template showing the protection signal. I took a short trade on this day. I booked partial profit and now my stop is somewhere here on the remaining position. If the stop is hit, fine, I will probably still end up with some profit, and if it continues to go down, I will let profit run. That was, I think, a very nice application of fine-tuned chart for precision entering a short trade in an otherwise pretty bullish market. And why it still worked in a bullish market? Because I again aligned the technical industry fundamentals, all their weakness together. I was not just looking at technical weakness, and then Q fine-tuned chart allowed me to take very low risk entry. I could book some profit as well. That was a trade I analyzed in the last Wednesday pre-market session, and I ended up having some profit from that. Earlier in the day, today, I was talking to one trader. I was showing him how different approaches you can use to find trades, and we did some live analysis and we found a trading opportunity. Let me show you how we found it. In Q technique, there are different workflows possible. One is top down, starting from this market view, market or sector, industry, stock breadth view, then going to the sectors, going to the industries from there, going to the stocks from there, top down. Lastly, looking at the technicals. The second approach is start with a fundamental analysis. Fundamental first, find fundamentally strong stocks, then look up their technical setup, then check their industry. The third approach could be finder first or technical first, bottom up, look for technical signals. Now let's try that. Market is bullish, as I mentioned. There may be a case for looking for both bullish trades as well as bearish trades. I took some profit in Iridium, IRDM, bearish trade. I took some profit in several bullish trades recently. I shared them on the forum, you may check them out. Now let's find some buying ideas as of Friday. In Finder, I'm going to look to the bullish tab. See, a large number of stocks went up by very large percentage on Friday. Some of them are certainly going to give buying opportunities. Because there are many stocks that went up by large percentage, I'm not going to look all of them one by one. Instead, I'm going to carry out a fundamental analysis first of the 602 stocks. What are these 602 stocks? They are from my trading universe of liquid stocks plus S&P 1500, and they are the 602 stocks that have given some kind of bullish signal on Friday, shown by this orange color. Now, I don't want to open so many charts with technicals, find a technical setup and then find out fundamentally it is not strong. Instead, I am going to carry out a fundamental scorecard analysis first using QVital. There are many workflows possible. Once you get used to the systems, you may pursue the workflow that suits your temperament, and if you are like me, you may also pursue the one which is most efficient in terms of time. When the number of stocks in Finder going up is very large, like 600 plus, the efficient approach is probably to look for the fundamentally strong ones first. That will cut down the list. So I now have the scorecard of the 602 stocks that gave some kind of bullish signal. I'm going to click the 3-star button to look for stocks that are both undervalued and having high earnings growth. And this is the stock that came to our notice when I was discussing with another trader, TX. Let's carry out a peer analysis of this stock. It is in steel industry. Let's check out the industry relative strength. That will be from QH. Steel industry up, alternate industry, iron, steel, the score is up. Percentage change is steadily improving. This is how to read it from left to right. If you see steady increase, then you know over 1 day, 2 day, 5 day it is going up. During market hours, the real time column will also show up here. If you want to see the longer term view of rotation in this industry, let's check that out from relative score. Immediately in 1 second we know it is a strong industry. So the industry allows us to buy. Fundamentally, this stock is a 3-star candidate. We already know that. This is a 1-page view. Undervalued stock, high earnings growth, secondary valuation is also great. In itself, the industry was strong on Friday, steadily going up over 10 days, 5 days, 2 days, 1 day. On Friday, up by 5.3%. The company is making money. Let's look at its charts. Today, I think my meta stock Q Global is little bit unhappy. I may come back to Q Global, maybe not. Let's use Q Elite. Today is Valentine's Day. So meta stock is certainly not going to be happy. That's fine. I'll make it up. TX. One look at the chart and you know what are the setups possible. If we look at the daily chart, it has a higher low, now higher high, bullish flow. Also, it is above white direction line, regained the yellow direction line. So it is giving many possible buy setups in the daily chart. It is also breaking out. So it can be a breakout candidate, it can be a go with flow long candidate, it can be a pullback candidate. On top of that, I see a reversal. In the weekly, the backdrop color is not cyan. So if we apply the weekly daily checklist, we cannot say it's a go with flow setup. So what are the setups or techniques that we may apply to buy the stock? One is a breakout, because breakout with high volume is a valid breakout. We can also apply the pullback setup. Pullback and then going up again, regaining the yellow direction line. White direction line is already below that. And also a reversal technique. Now if we look up TX from Finder, let's do that. Look up Finder. Even before opening the chart, we could read all that. It has a breakout setup, a pullback setup, go with flow setup, touch the trend line support. That's even better because it touched a trend line support and broke out of a trend line resistance. Even better, bounced also. Bounce means touching plus going up with high volume, and a reversal candle. So there are many bullish signals that we could find from Finder. This is a buy setup as of Friday's close. Stop would be just below the trend line support and entry would be Friday's close. This is a trade that could be taken at Friday's close. Profit could be booked once risk resistance was covered, maybe when it came to this watermark level, or if it continued to go up, the next profit target could be the upper boundary. It is giving a valid Q long trade setup as a breakout candidate, as a pullback candidate with a reversal candle. So there are trades possible in both directions right now. If we are buying, we are going to buy in strong industries. Now let's do one more thing now. This is the bottom up approach. Let's go back to Q Edge. Start with the home page. Home page is showing that market is bullish. Let's look at the sector scores. I like to look for the strongest sector for buying. Over one day, energy is strongest. Next is communication services. Next is materials. Let's drill down to materials. There are several material sector industries. I sorted them, and let's look at the top few. Drill down into the stocks. Look for the 3-star candidates, that is stocks which are strong in terms of valuation and earnings growth. I didn't carry this exercise out before. Left with 2 stocks, both are in steel industries. Remember the stock that I found just now from a different workflow, TX, Turnium SA, that was also in steel industry. Now from top down approach, I ended up with 2 stocks in strongest sector, one of the strongest sectors, one of the strongest industries and fundamentally strong. Both are also in steel. I mentioned in previous webinars, when you follow different approaches, you come down to the buying opportunities in same industry, that is even more reason to buy. Yes, Harry has a comment that earnings may be nearby. I didn't look at that for TX. If earnings is nearby, we may be cautious. For TX, earnings is 23rd February. That is okay. Usually our swing trades, Q trades, usually, not always, but usually they last between 1 week to 2 weeks. If the earnings is 23rd February, we still have time to take a long trade. That is for trading stocks. And if I am trading verticals, provided options are liquid enough, then I don't mind taking the vertical trade across earnings because the risk is limited, defined risk anyway. Let's come back to the 2 steel stocks we saw using top-down analysis, and to make sure my Q Global is not unhappy, let me use Q Global. See, seems it's not happy with me. One last time. Okay. Steel Dynamics, STLD. I wouldn't buy now because it has already gone up from the recent low. I would start to look for buying opportunities from the recent low. Why? Because it created a false downside breakout. It had a bull release signal and the reversal was associated with high volume. So I could apply the box long trade setup and think of buying on this day which was also a gap up open day. Because it was a gap up open day, it was possible to put stop just below the gap up day's low. So I could find STLD on that day. It would be shown as many bullish signals on Finder, including gap up day on that day. But now it has gone up little bit, still bullish, but not my style to buy now. So STLD is bullish, but not buy for me now. And new core NUE, again, if I did the exercise regularly, I would have bought NUE on this day, probably. Why? Because it stopped at the white direction line with 2 days of long lower tail, then a bull release signal, and bullish pressure, bullish U-turn at the same time. In any case, now there is no trade setup. We found one stock where we have a trade setup today. That was TX, but that is not all. I shared another idea on Friday. Let's look at it. AMCX. Again, the 360 degrees analysis was attached. Broadcasting industry was strong. Pace was showing it was accelerating. Reason enough to buy in this industry. I found this stock AMCX. It was up by 3.8% when I shared it. When did I share it? In the morning session, 10:40 a.m. Eastern Standard Time. Great valuation that allowed me to buy a short squeeze potential. The industry was strong in itself. When I shared it, what did I see? It created 3 doji candles with long lower tail. Those are very bullish patterns. 3 out of 3 days, long lower tail candles stopping or reversing right at the trend line support. Trend line supports, the memory trend work very well. Doji candle, series of them followed by a bullish shape candle. The understanding is from here price is more likely to move up or down than down. The stop would be just below the recent low, below this long lower tails. Entry would be at Friday's close. This was an intraday chart. We'll have to see how the market closed. I'll look at that soon. And even if it went up little bit, the risk distance would be covered. So it was an easy decision. What setup? It was a pullback setup. It pulled back in an uptrend, stopped at a robust support. What was the robust support? Trendline support, and starting to go up again with relative performance bullish. Pullback technique. Now let's look at how it closed. AMCX. It confirmed the pullback setup. So we had many buying opportunities. TX was one, low risk buying opportunities, AMCX was another. What are the common aspects of these two trades? Many common things. Firstly, they are all 360 degrees trades. That is industry, fundamental, technical, and of course market is bullish. Everything is aligned with these trades. The other and equally important common factor is the risk is small. We are not breakout traders, at least not in general, unless there is a low risk breakout opportunity. Breakouts may be taken more comfortably using verticals because breakouts tend to pull back and then it may go up again. Using options verticals allows us to hold on to the trade without getting stopped out. If you are interested, you may look up the trade on AXL I shared earlier. Very robust industry at that time when I bought it. I bought it using verticals. It was a breakout setup. I used verticals and I booked profit. The idea is on the forum. Those are the common things. Now there are other traders who trade breakouts and I came to know of this stock. Let me go through one last stock before ending today's session. This is not a stock one would usually buy using Q technique. Why? Because it is OTC. So I didn't buy and I don't plan to buy OTC stocks. but this apparently has good technology. Apparently has good technology may end up like Nikola as of today or Tilray as of today. Not necessarily they go up forever, but if at all, I wanted to discuss this talk is for the reason if at all some Q user is thinking of buying stocks like this, what would be the buy point? In the last one or two webinars, I explained you may look back from the right side and apply the unambiguous checklists. Q technique has the advantage the checklist entry points are unambiguous, so you could look back and see where you could buy. Could I buy anywhere here? Possible but difficult because it was already at upper boundary. Then it was in a sideways range here. Could I buy here? Yes, I could buy here. I'll come back. And before that, no. Before that, it was at rock bottom price. The first up move after very narrow range rock bottom price is usually not the safe time. Let it go up the first wave and then consolidate or pull back. After pullback, if it starts to go up, buy, or if it consolidates, when it breaks out, buy. Was there a breakout setup? That is the question. Let's look at the template with memory history. Remember, the memory breakouts come before pivot breakouts. Therefore, they are giving lower risk opportunities. Like IBD cup and handle breakout, that will come after the trend line breakout happens. Not that there was a cup and handle pattern here, but you can see here when it was consolidating, it formed a triangle. In Q elite registration, you can see the historical trend lines, and on this day it broke out of the triangle with a bullish flow. So we could take it as a breakout trade. The breakout was also associated with high volume. So this would be the perfect day to buy this stock if anybody was tracking this OTC stock WNDW. Stop is narrow. That's a constant in all Q trades, just below the recent low. And as it went up, of course, I can see from the dot, earnings was there. OTC stock earnings. Probably you are buying OTC stocks thinking it is going to go up. So you may not be worried about earnings of an OTC stock. You would buy here, put stop here, and hope it will go up. Window WNDW seems to have good technology. Seems to have, but OTC stock I don't buy. But if you wanted to buy OTC stocks, you could use Q technique just as you could use Q technique on liquid stocks, on FANG stocks. So this would be our buy point, and we could book partial profit and we could continue to hold the remaining position in no hurry to come out because we have booked profit and probably put the trailing stop in a way that the trade is guaranteed risk free barring gap downs. The market is continuing to be bullish. I am happy to look for both bullish and bearish trades. Happy to take both. For example, I shared Iridium. I took a short, booked profit, holding partial position with trailing stop. AMCX, I took a long position on Friday. Let's look at one last stock if you allow me. Did I look at it? SXC. This is another I think a nice candidate. Let's look at its fundamentals. And the more you see me applying or anybody else applying, by the way, when I started typing SXC and came here symbol, I know it is in the same industry, steel industry. Steel industry I already know because we saw several stocks in this industry to be strong. In the industry itself is strong, but let's look at the one page snapshot of SXC and come back to the chart also. The weekly is bullish, no doubt about it. Bullish shape, bullish color backdrop. Importantly, after earnings, it is going up. In daily, higher high, higher low, trend line support. We would wait for it to break above trend line resistance, which happened on Friday. And again, importantly, after earnings, it moved sideways for a while to shake out the weaker hands and now breaking out. That is a bullish pattern. So this is giving a breakout long setup and also it is happening after a few days of sideways move after earnings. Weekly is bullish, so this is giving a valid long setup. We know steel industry is strong, and if we check its fundamentals, great valuation again. Instantly we know great valuation, great earnings quality, short squeeze potential. That is reason enough to buy if you see the percentage change from 10-day to 1-day steadily going up. 3.96% dividend yield. So this is also a stock I might have bought on Friday. So I am comfortable buying stocks that are having 360-degree buy setups, comfortable shorting stocks, though not the best market right now because market is bullish. I did take a short in Iridium, holding partial position, and Macy's. I don't mind taking a bearish trade on Tuesday if it continues to go down. I'll be happier if the market also goes down, then I'll have more confidence taking short in it. In this way, whatever be the market condition, if I can, you can do probably even better than me, because you are in the, many of you, if not most of you, are in the American time zone. It is opposite time zone for me. If I can trade with confidence, I'm sure you can do better than me. That is all for today's session. I look forward to seeing you in our next session. That will be most likely on Wednesday at 8 a.m. Eastern Standard Time. You have a great weekend. Monday is market closed, so you have a great long weekend. Keep safe and trade profitably. Thank you.